In today's episode, I'm going to share with you the signals that I look for that tell me when to buy, when to hold, and when to sell. Now, I have a perfect example from today. We had a stock that basically perfectly met my criteria for being the right type of stock to trade. I'm going to break down those criteria in today's episode. And I actually took one trade on the stock, but I wasn't impressed with the price action. And so as the chart was forming, it was creating a pattern and a bit of a setup, and I began to think maybe I should get back in. But I actually saw a very specific signal that told me not to get back in, and I didn't. I followed that signal, and as a result, I saved myself what would have undoubtedly been an unnecessary loss. Experience in trading, which is something I have a lot of, generates a level of educated intuition. I have a gut feeling of when things are going to work and when they're more likely to fail. Now, I'm not right 100% of the time, but I do have an edge in the market, and part of this is the result of all the experience that I have. My hope for these episodes is that I'm able to help you piggyback off of my experience by sharing with you these subtle signals that I see that sort of get my hair standing on end and help me recognize, wait a second, this is a setup that's a trap. I have to step back and wait for a second because what I'm about to show you was a hands down absolute trap, and I saw beginner traders fall into it. My hope is that you can avoid falling into these traps in the future. So let's go ahead and jump into today's episode. I want to start by making sure we're all on the same page when it comes to stock selection. So I'm going to break down my criteria for you, and I'm also going to share with you some of my bonus criteria. By the way, there will be a link pinned to the top comment and linked in the description if you want to download my stock selection criteria as a PDF. You can print it out, you can have it on your desk, and if you're learning to trade momentum the way I trade it, then you should be definitely using this criteria to help you identify stocks that are worthy of trading from stocks that you should completely leave alone. Okay, so let's jump into it. Now, the stock that we're going to be doing a deep dive on today met my criteria from this perspective right here. Number one, the price was between 2 and 20. This is the price range where we typically see the most momentum, we see the cleanest moves. Number two, the price was already up 10%, which is good because that means it's fairly obvious, it's getting some attention, it's breaking the standard deviation of what most stocks are doing. Number three, the relative volume was 5 times, which is good. I like to see higher relative volume because that helps me understand that today is a significant event compared to what's normal for the company. I like to trade stocks that are experiencing heightened volatility, and usually that volatility requires a high level of volume that's above average. Number four, that's typically brought in by some type of breaking news event, a catalyst, and that was the case today. Now, these 4 items here, these are all characteristics of high demand. So I'll just put a D here for demand. These are all indicative of a stock that has a very high demand. Breaking news, the price, the percentage change, the relative volume. And this right here is supply. And now we're talking about the supply and demand imbalance. Supply is the number of shares available to trade. It's the float. And so the float on the particular stock that we're going to be looking at today was 1.3 million shares. So it's a very small float. The float is created when a company does its initial public offering. Now, the float can change over time. From the number of shares they sell during the IPO, a company could do secondary offerings and sell more shares onto the market. They could also do buybacks, and they can do stock splits, traditional splits and reverse splits. So the float can change. The best way to know with certainty what the current float is today is to look at the most recent quarterly earnings statement, which will say the number of shares outstanding, and then check to see if there have been any news events between that statement and today's date that would have changed the float. Generally speaking, the market data vendors that we use are pretty accurate with showing the float. So this is the stock selection criteria. These are the 5 things that I pretty much must see in order to consider taking a trade. Now we've got some bonus criteria here on the back. The bonus criteria is number one, if the stock is without a doubt obvious. In order for me to consider a stock to be obvious, it usually has to be like the number one leading percentage gainer in the market, also leading in terms of volume. This can be tricky because sometimes you'll have a stock that is the leading percentage gainer, but it doesn't have a lot of volume. So then, is it really obvious? Other times you'll have a stock that is maybe the 4th leading percentage gainer, but has a ton of volume. So it's like trying to figure out which is obvious is a combination of which is the number one leading gainer, but which stock also has the most volume, because ultimately volume is communicating what's obvious to other traders. It's also a bonus criteria if a stock is a recent reverse split. This one was a somewhat recent reverse split. A recent IPO, can be particularly powerful setups. A blue sky is when a stock is at all-time highs. And number 5, if the stock falls within a hot sector. Hot sectors vary from time to time. What's hot today may not be hot 6 weeks or a month from now, or whatever the case is, 6 months from now. But whatever's hot right now, if a stock is in that sector and is also obvious, if it's also a recent reverse split, that's when you can get kind of the perfect storm here, which is sometimes we'll see a stock that is the most obvious. It's also a recent reverse split, and it's also a hot sector. You wouldn't typically have a recent reverse split and a recent IPO, or a recent reverse split and a blue sky setup. That's not going to be very common, but it is possible that you could have 3 out of the 5 bonus criteria. And when that's the case, well, this is definitely a stock that's going to very closely meet our criteria plus the bonus criteria. So it's something I definitely want to pay attention to. Okay, so the stock that we're going to do the deep dive on today, DTSS, met really all of these criteria. Everything checked out except for one very important thing. Everything we're talking about here, this is more or less absent the chart, right? The way the chart looks isn't really factoring in to stock selection. Stock selection is focusing first just on the vehicle, on the actual stock we're looking at, and whether or not it meets the criteria for being worth trading. But then we have to look at the chart. And so when we look at the chart, that's when things, in the case of DTSS, start to change. So we're going to get zoomed in here first on the 1 minute, and I'm actually going to play for you my commentary that I gave this morning while I was trading it before this all played out. Now we can see the stock has declined quite a bit from where I was initially looking at it, nearly 25%. So it's definitely pulled back. I definitely had the right call to stay on the sidelines after I saw this chop. But let's jump back over to the whiteboard for 1 second and talk about our criteria from the perspective of getting into the chart. So this is going to be TA, our technical analysis. The previous criteria are a little bit more on the fundamental analysis side of things. Not completely, but sort of bordering on that. Okay, so charting and technical analysis. So number 1, I like to trade when the MACD is open and when it's moving up. So I avoid trading after we've got this crossover right here. I'll show you what that looks like in a second. Number 2, I want to focus on clean candlestick patterns. So I'll just do candlestick patterns. So I'm looking for clean candlestick patterns here. And what that means is on the chart, I'm going to look for the characteristic patterns that I trade all the time, including, for example, our bull flag. So we have a stock that makes a nice quick move up, a little micro pullback, maybe on the 1 minute, could even be on the 10-second chart, and then for the push higher right here. So I want to see clean candlestick patterns. And in other words, sort of part, a sub part to this. So A would be seeing the actual pattern, and then B, no topping tails, right? Number 3, we're looking at volume profile. So the profile of the volume, profile of the volume. And then number 4, we're going to look at market depth. So this is where we're starting to get into a little bit more of the weeds, but these all create those subtle buy or sell signals. Okay, so if we jump back onto the chart here, the first thing that I'm going to point your eye to is the original shape of these candlesticks. So without even looking at, we could just, I'll just minimize, let's see, I'll just close it for a second. I'll hide it and we'll bring it back. Let's see, hang on. Let me just hide it and hide it. So without looking at volume, without looking at MACD, we're just going to look at the candlesticks first. And what you're going to see on this chart is we have a big green candle, another big green candle, and a micro pullback. This is where I took my first trade on that micro pullback. And that was okay. It was a small trade. It wasn't a big winner, but that's okay. I was being a little conservative on share size because of an issue in market depth that we'll talk about in a minute. It ends up pushing higher, and then it reverses and comes back down. When it comes back down, I notice that we've got a little topping tail at the top of that candle. Now we break below volume weighted average price, which is our orange line. So that's quite a bit of weakness. It does bounce back up, but another topping tail, and it goes back below VWAP. It's not able to hold. It does come back up VWAP, and now we've got 3 topping tails in a row, followed by this kind of rejection. And about this time, you could draw this kind of ascending support line connecting the lows of these candles with the low of this candle. So we're starting to see, okay, there is some support, but what are our candlesticks telling us? When we have these types of candles where we have this topping tail, a topping tail like this is communicating a message of weakness because the price goes up and the sellers pull it back down, right? So the sellers are the ones who dominate by the end of this candle. They're the ones who are in charge. Okay, so because of that, I'm seeing these topping tails. I'm not liking it. Let's add volume in. So now we're going to check the volume, and the profile pattern on the volume is high volume red candles, high volume red candles, high volume red candles, high volume red candles. This is a subtle hint that there is more selling than there is buying. We don't like to see that. Now we check the MACD. We look at the MACD and we see that there's this dramatic crossover right here. And for the rest of the move, more or less, the MACD is negative. It barely gets positive for a second here before going back into the negative. So the MACD is a moving average convergence divergence indicator, and it's showing that the moving averages are converging. They're moving together. We're going into a period of consolidation. And I said what could very likely happen on this is we get a break to the upside and then a dramatic flush. We ended up not even getting that break to the upside. We didn't even get that. It just eventually rolled over and basically got crushed. So the issue here on this was that, unfortunately, we had poor charts. We did not have clean price action. We didn't have any really nice, good-looking candlesticks that I was able to work with. We had these topping tails. We didn't have a nice bull flag. We broke below the moving average. We got back above it. MACD was crossing over. We didn't have a good volume profile. Now let's go a step deeper. We're going to start talking about market depth. So what I want to do right now is I want to jump into the commentary from this morning. I'm going to play that so you can listen to it, and then I'm going to resume. I'm going to pick back up when that commentary finished. So if you're looking just at the chart on this stock, you might think it's not a bad looking chart. You can see we've got this ascending support trend line. So we look at the 1 minute chart, draw the trend line over here as well. So it keeps dipping down. That's the low of this pullback. We got a double bottom there. It's kind of holding up in this area. Now, maybe some people would draw the trend line like that, depending on how you draw it. It keeps kind of coming up to this 710 area. So 710. The problem is that each time it comes up, it's rejecting. So when we look here, we're seeing all of these topping tails. So it's tapping, rejecting, tapping, rejecting. Now, I think, I've noticed some people who have gotten frustrated because they keep trading this and they keep losing. But let's take a step back and ask a couple questions. Is this an A-quality setup right now? Well, based on my criteria for an A-quality stock, I would argue that it's not a bad stock. It's got a 1.3 million share float. The price is between $2 and $10. The relative volume on it is 3,899. It has news. The 200 moving average, well, it just broke above it. Right now it's kind of at it, but it's not bad from all of those perspectives. Is it the most obvious stock today? I'm not sure that it is. It's up 53%. It's got volume. So, it's fairly obvious, but from the perspective of taking a trade on it right now, MACD is crossed over, right? We had this big move up, a dramatic pullback. Look at the high volume on the selling candles. High volume on the selling candles. Now, if you look at the level 2, you can see on the level 2 that we're periodically seeing these sellers stacked up. We pull up this view here of level 2, and this is showing us the level 2 visually on the chart horizontally. So you see these are all of the orders that are currently placed on the stock. And what you can see is that right up here at 7, we've got a wall. That's what this kind of heat map is showing. This is a wall of sellers. 18,000 shares at 710, 30,000 shares at 720, 19,000 shares at 730. So this is a giant wall of resistance right here. And realistically, for it to break this level, you need 50,000 shares of buy orders. Now, what I've seen happen before, and this is really sketchy when this happens, is because you've got a big wall like this, short sellers are going to start to feel like confident going short. They're going to be like, look, there's a huge level of resistance here. I'm going to short it. And then what all of a sudden happens is you get a clear out move. The clear out is where this breaks, shorts stop, so you get a ton of volume that goes through, some longs jump in, and then immediately it reverses and it flushes back down. So what you end up having are a couple of candles of really high volume, which creates the liquidity for these people to dump their shares. So they can actually cancel their orders. They take their orders away. The stock rips up. And then as it's ripping up, they start selling its market orders. Shorts are covering, so they're selling to shorts. Longs are buying, they're selling to longs. And then when it fails to go higher, all of a sudden everyone dumps and bails out, and you get that jackknife reversal back down. So that's what I would be concerned about happening. Now, right now, it's not even at current prices. It's not breaking that level. Those sellers are still holding firm at 710. And we don't really know who's selling all those shares. We don't know if it's a short seller. We don't know if it's a trader who's been holding for a long time, an investor. We don't know. We don't know how sophisticated the sellers are who have those orders up there. If they're an institution, then they're more likely to use the tricks that I just talked about. If it's a retail trader, they may not know. They might just be throwing out orders on this stock and just saying, well, I'll just put these orders out and leave them there. But even without looking into that market depth, what you can see here are high volume selling bars, high volume selling candles, high volume selling candles. So in totality today, the highest volume candles are all red. And when you look at the chart, topping tail, topping tail, topping tail. You look at the MACD, we were open, but then we crossed over and we've been steadily declining. So we're in a period of consolidation. The price is going sideways. And these are periods where when we get the breakout, it can be very dramatic. Either the pop and then the flush. Now, we could get the opposite, a drop and then a pop back up, but I don't expect that based on the profile that we're seeing here of these sellers. But the thing is, there's a lot of people who are buying. These green bubbles are people buying into these breakouts. So they're buying right up here into these levels. And I think it's because they don't see the depth of the market. They don't see all those orders on the level 2. So they keep thinking, oh, this thing's going to break. This thing's going to break. And they keep getting disappointed. They keep getting let down. I'm not going to get tricked into that. I am sitting on the sidelines. Now, granted, I haven't taken very many trades today. I'm only up $300, which is a very slow day. But it's better than being red, obviously. And my focus right now is trading high-quality stocks and high-quality setups. We need that combination of the stock and the setup. So right here, you see we're kind of coming back up to that $7.10 level. And each time it comes up, it sort of accumulates, and then you get that dump. It accumulates, and then you get that dump. This is just that classic choppy price action that's going to stop out a lot of traders. You're going to get a lot of paper cuts. They may not be huge losses, but it's just like small loss, small loss, small loss, to the point where eventually you say, you know what, this is ridiculous. I'm getting frustrated, and you leave, down whatever it is, 500, 1,000, couple $1,000. And my feeling is that this is unnecessary. So the first criteria, is this the right type of stock to trade? Yeah, it's the right type of stock. Is it the most obvious one today? Well, if we look and sort of use volume as a measure of obvious, there's other stocks that have more volume today, right? 9 million shares is not nothing, but there's other stocks that have quite a lot more volume. And they're mostly cheaper stocks or higher float stocks. But from a percentage change on the day, 54%'s not bad. So it's probably okay. I think the real issue on this is that for whatever reason, there is either a group or a fund or one seller who's just trying to unload shares. And you can see that, when this move kind of first started, they weren't there. It pulled back, and then they kind of appeared with their first order. And then the next one came on. There was another one here. This one got canceled right there. Then this one came up right here. And some of them have gotten even bigger. Now you do see there's a buy order there, and there's currently a buy order here at 660. That could be a short seller. that could be someone who's buying to cover a position that they took off of this level. So if we come down to here, we may see a little bit of support around that price. That could be a spot to consider a dip. But honestly, I'm really not that interested in trading this at all, because I think it's just, when you see a stock that has this type of stuff going on, I mean, this is just the stuff that we can see. There's more stuff happening behind the scenes, behind the curtains, that we can't even see. So I'd rather just steer clear of this and wait for something else. So it's the right type of stock, but the chart pattern not supporting an entry. It's way too choppy. And then the market depth, or the level 2, is adding even more context that is telling me this is something I should just completely leave alone. Now, the fact is, it costs money to subscribe to these levels of market data. You're going to spend more money on it. These tools are more expensive. You know, it's something that a lot of beginner traders won't spend the money on. And I get it, because, you know, trading, you know, you want to keep your kind of burn rate low. You don't want to be subscribing and spending $500, $700, $800, $1,000 a month on all these different monthly subscriptions, because it's just going to eat into your profit. So I get people wanting to do things on a budget, but you can also tell that when you have more money to invest in better tools, you're going to see the market through a different lens. And that can be the difference between seeing something that has a very high likelihood of being a false breakout and leading to disappointment, and thinking something, oh, actually, this looks pretty good, and taking the trade and then being disappointed afterwards. And I guess if you think about it like that, you might be able to argue that the money you save, you know, paying for the tool is more than, you know, what you would have what it would have cost you in the losses. I mean, that's always something you kind of, I guess, have to make a judgment on, and it's hard to know really exactly what that is. And that's the same thing that I deal with commissions too. You know, I'm paying fees and commissions on all my trades, and it's like, is this money well spent? Or am I saving more than it's costing me with these commissions? You know, I'm not really sure. So kind of, it's hard to know with certainty, but you know, if you're making money generally, then you're doing the right thing. So if you got caught up and chopped out on DTSS, you know, I get it, but just sort of a word to the wise that when you see this kind of price action, even without looking at market depth, you've got the topping tails, MACD's crossed over. So the only trade that I took was on this dip right in here. So we got this pop, we got a little dip, and I traded it with small size because it had just come out of a halt and it had light volume. And if we remember, the volume on this candle was high volume, and it was red. It was selling. So I was like, I'll take a starter, but I really didn't get comfortable with it, and I got out very quickly. And then I didn't feel comfortable getting back in. So gut check, MACD, not good. Volume profile, high volume selling. Candle formation, lots of topping tails, showing the sellers are, you know, pulling the price back down. Those three things, check those three things. That you can do on a budget. You don't need extra market data to do that. Now you subscribe to level 2 data, you can start to see sort of some of the orders there. First tier of level 2, top of book, you'll start to see those bigger sellers lining up, right? So then you'll be able to visualize that. You want to spend a little bit more for total view. Now you can see all of the orders on the book. And, you know, when you do that, we see right now there's not a lot of buy orders down here. We've got sell orders, but not buy orders. So, you know, that's painting a picture for sure. All right, I hope that was helpful for you guys. Sitting here right now, kind of looking to see if we get any other opportunities, because at the end of the day, it only takes one good trade a day. And if I focus, you know, on just taking one really good trade each day, I could do a lot better than taking 100 trades a day. So it's just quality over quantity. So that was my live commentary from this morning's trades on DTSS. And my hope is that for traders that are tuning in my broadcast or all of our Warrior Pro members that you're able to benefit and piggyback all of the educated intuition that I've picked up over more than a decade of experience trading in the markets. And I want to give you guys a link where you can tune in for a 2-week trial. So you can listen over my shoulder. You can even use the tools, the scanners, the charts, everything that I'm using every single day and see whether or not you like this platform, see whether or not you like this community. So if you're ready to become part of the Warrior Pro community, we'd love to have you. Check out that link right below, and I'll see you for the next episode real soon. And I'll remind you, as always, that trading is risky. My results aren't typical, so manage your risk, take it slow, and we'll see you for the next upload real soon.